Your 401k is not your retirement plan. Right now, it's a machine that quietly transfers your money into Wall Street's bonus pool, while you hope there's something left for you at 65. You've been told, you're doing everything right, just keep contributing. But if you're like most Americans, you're on track to hit retirement with a number that looks big on paper and still isn't enough to actually live the life you're working for. Let me ask you something simple. If you stopped working tomorrow, how many years could your current 401k balance actually cover your mortgage, food, healthcare, and inflation? Most people I talk to can't answer that. They just say, "My advisor says I'm on track." Meanwhile, a 1 to 2% fee over 30 years can drain $300,000 to $500,000 from your retirement. Healthcare costs in retirement are projected to be hundreds of thousands of dollars, and Social Security is, let's just say, not something you want to bet your future on. I'm not here to scare you. I'm here to show you what's really happening, and more importantly, how to get out of the trap. In this video, I'm going to expose how the 401k trap keeps middle-class Americans stuck in just enough to survive retirement. I'll show you 3 alternative wealth pillars wealthy people actually use: fractional real estate, your own intellectual property, and crash insurance assets. And I'll give you a simple 12-month game plan to start shifting out of the trap step by step. Welcome to the Wealth Ascent. Here, we don't worship the 401k. We expose financial traps designed for the American middle class, and we build smarter, more resilient paths to real freedom. If you're tired of vague advice and "you'll be fine, don't worry," you're in the right place. Let's get very real about the 401k. The sales pitch you heard was simple. Just set it and forget it. Max it out. Compound interest will take care of you. Here's an example. Say you end up with $800,000 in your 401k at retirement. That sounds like a lot, right? If you try to live on 4% per year so you don't run out, that's about $32,000 a year before taxes. Add Social Security, maybe you're at $50,000 to $60,000 a year total. Now ask yourself, in 20 to 30 years with inflation and higher healthcare costs, does that feel like freedom? Or does that feel like, I hope nothing goes wrong? Now add fees. If your fund is charging 1.5% in total annual fees, and you think you're making 8%, you're actually only seeing 6.5%. Over 30 to 35 years, that small difference can mean the gap between $1.2 million and $800,000. That gap, that $400,000, doesn't just vanish. It got transferred from your future to their present. Picture this. You're 67. You did everything right. You worked over 40 years. You contributed to your 401k. You trusted the plan. You thought retirement would mean travel, time with family, and doing what you love. Instead, you're checking prices at the grocery store, arguing with insurance over medical bills, and wondering if you can turn up the heat this winter. That's the 401k trap. It doesn't usually end in disaster. It ends in barely comfortable, kind of stressed, and no room for error. If that's not the retirement you want, then you cannot afford to just set and forget anymore. So what do wealthy people do differently? They might still use tax-advantaged accounts, but they don't rely on them. They build multiple pillars, assets that pay them while they sleep, assets they control, and protection against when the system breaks. Let's start with the problem almost every American feels right now: housing. Maybe this sounds like you. Your rent went up again this year. Home prices in your area feel insane. Down payment numbers look impossible. And with interest rates where they've been, buying feels like a joke. So you quietly tell yourself, I guess I'll just be a renter. That's my reality. Here's what almost nobody tells you. You can be a renter and still be an owner. You can collect income from real estate without a huge down payment, without tenants calling you, and without owning a single house in your own name. In the next few minutes, I'll give you 2 concrete ways to start doing that with a few $100s, not hundreds of thousands. Pillar 1. Fractional real estate. Option A. REITs. Real estate investment trusts. Think of them as companies that own real estate portfolios, apartments, warehouses, offices, data centers, shopping centers. They collect rent from tenants, pay expenses, and then distribute a portion of the profit to shareholders as dividends. You buy shares of a REIT just like you buy a stock. Why this matters for you? You can start with $100 to $500. You get exposure to real estate income. You don't deal with tenants or toilets. Many REITs pay 3 to 6% dividend yields. This changes, do your research. Instead of only feeding Wall Street through your 401k, you start getting a slice of real estate cash flow, even as a renter. Option B. Pooled or group real estate deals. These are structures where a group of investors pool money to buy larger properties together, apartments or small commercial buildings. You might put in $1,000, own a small percentage of the deal, receive distributions from rent, and participate in profit when the property sells. This is not a recommendation to jump into any random deal. You need to research, understand the risks, and never put in money you can't afford to lose. But the bigger point is this. The system told you you're either a homeowner or you're nobody. That's not true. You can be a renter and still have your money working in real estate. Now let's talk about the asset almost every American underestimates, and this one is 100% in your control. Your mind. Your 401k invests your money. Wealthy people invest their minds. Your skills, your knowledge, your stories. Those can become assets that pay you again and again. Someone builds a clean, simple budgeting spreadsheet and sells it online for $9. 10 sales a month is $90. 100 sales a month is $900. They built it once and it keeps earning. Someone pays off $40,000 of debt and turns that journey into a short video course. They price it at $49. If 30 people a month buy it, that's over $1,400 in extra income. Someone creates a guide showing how they got their first promotion, how to negotiate, talk to managers, and position themselves for a raise. They charge $29. Even 20 buyers a month is nearly $600. Checklists, templates, simple toolkits. These seem small, but they stack. You don't need millions of followers. You need one asset that solves a real problem for a real group of people. These digital assets are not tied to the stock market. They don't crash 30% on a bad headline. They can grow over time as you improve them. One good intellectual asset can do more for your freedom than another 2% in your 401k contribution ever will. Pillar 3. Crash insurance. I'm not saying sell everything and buy gold. I'm saying have a small piece of your net worth in assets that historically hold value when currencies are under pressure and markets panic. That might be a small allocation to gold or silver, or broad commodity exposure through certain funds. Look at history. The dot-com crash, the financial crisis, the pandemic panic. People near retirement watched 20 to 40% of their savings disappear right when they needed it most. If even 5 to 10% of your net worth is in assets that don't move exactly like the stock market, you're less likely to get wiped out by one bad decade. This isn't a get-rich-quick strategy. It's a don't lose everything strategy. Now let's turn this into a simple 12-month action plan. First, get brutally honest. Log into your 401k portal. Find out exactly what fees you're paying. Estimate what your real monthly income looks like after inflation and taxes. Learn the basics of REITs, fractional real estate, and simple digital products. Then make your first moves. Maybe $200 into a REIT you've researched. Maybe blocking 2 hours a week to start building your first digital asset. Set a rule. For every dollar that goes into your 401k, a few cents also go into something you control. Then build and test. Launch your first small digital product, even if it's imperfect. Make your first $10 online from your own brain. Adjust your allocations so you're not all in on one system. Finally, strengthen the pillars. Add more to fractional real estate if it fits your risk tolerance. Improve your digital asset or create a second one. Consider a small crash insurance allocation. If you follow this for a year, you won't just be a 401k holder. You'll be someone whose money and mind both work for them. Now let me be straight with you. The system is not designed to make you free. It's designed to keep you working, keep you contributing, and keep you hoping it all works out. You watching this far tells me you're done with hope as a strategy. So hit subscribe and turn on notifications. This channel exists to say what HR, advisors, and banks will never say out loud, and to give you tools to actually do something about it. And if you're worried about being a permanent renter and what's coming for the housing market, watch the video on your screen right now, my 2026 housing warning. You just saw how the 401k trap works. Click that video and let's dismantle the rent trap next. This is your wealth ascent. Let's build something they don't control.